the stochastic indicator. And so again, here for today's video, I'm going to be using Tradingview, completely free to use. So head on over to Tradingview now if you want to follow along here. And I'm going to start this video by just using SPY, and I'm going to be using the daily chart here for today's video. Now, the very first thing I want to do here, guys, is show you where you would find the stochastic indicator and how you would go ahead and add it to your chart here. So what you want to do is you want to go to the top here, and you want to go to this indicators tab. Go ahead and click on this indicators tab, and here we can search for any indicator that we want to add to our chart. So go ahead and search for stochastic, so STOC, and just by typing that, as you can see under technicals, you will see the stochastic indicator. It's going to be this first one here. So go ahead and click on this once. This will go ahead and add it to your chart. So now we can go ahead and close out of this window here. So again, as you can see, you now see the stochastic indicator down here. Remember, if you want to change any settings on here, you just hover over it over here and click on the settings button, and you can change the defaults for the stochastic indicator. But I'm just going to leave it as it is, okay? So go ahead and click on OK here once you're done with that. Now let's first start by talking about what the stochastic oscillator is. So the stochastic oscillator is a momentum indicator comparing a particular closing price of a security to a range of its prices over a certain period of time. So the stochastic oscillator is range bound. What does that mean? That means that it's always going to be a value between 0 and 100. And what this means is that it makes it a useful indicator of overbought or oversold conditions. And so generally, here's how it works. As you can see over here at 80, we have this dotted line. And so if the stochastic indicator has a value of 80 or above, that potentially means that the stock is overvalued. Similarly, as we can see down here, right at 20, there's a dotted line. And generally speaking, what it means is that if the stochastic indicator has a value of 20 or below, that might mean that the stock is oversold. Now, with that being said, right, and by the way, that sounds very, very similar to the RSI indicator, and I'll make a separate video comparing the two. But here's the biggest mistake that traders make. A lot of traders, when they first start, tend to try and use this indicator by itself. And so what they'll do, for example, is they'll add this indicator to their chart. And then, for example, they'll look over here and say, hey, look, right, the stochastic indicator is above the 80 line here, right? So meaning that it's overbought. And so they'll say, okay, well, it's above 80, has a value here of, greater than 80. So that must mean that it's overbought. So I should go ahead and short the stock here. So what would have happened if you tried to short SPY at this particular moment? Well, as you can see, what happened to SPY the next couple of days? It shot up, right? It went a lot higher, so you would have lost money. Similarly, a lot of traders will look down here, right, and see that the value is below 20, potentially signifying oversold, and they'll be like, oh, okay, so it's under 20, it's oversold, so I should go ahead and buy and go long. Well, again, if you would have done it at this point, what would have happened? Well, as you can see, right, SPY went a lot lower. So again, you would have lost money. So again, a big mistake traders make is that they use this indicator by itself. So you should be using other things, and I'll show you what other things you could potentially use to make it a higher probability of success here. So what traders should look for, there's a couple of things, but let's first start with the first one, right? What traders should look for is changes in the oscillator for clues about future trend shifts. So let me explain what I mean by this. So as you can see here, right, the oscillator here generally consists of two lines. We see two lines here in this indicator. We have a blue line and we have an orange line. The blue line here, okay, is the actual value of the stochastic oscillator here. The other line, this orange line, what this line does is it reflects the 3-day moving average for the stochastic oscillator. Now here is the catch. Because price is thought to follow momentum, the intersection of these two lines is considered to be a signal that a reversal may be coming. So generally, the way a lot of traders use this is that when they see the stochastic line here, which is the blue line, go above the orange line, so for example here, that might potentially signal that a reversal is coming. And so in that particular case, it would be that you'd be bullish on that. And then similarly, when you see the stochastic oscillator, so again, the blue line heading below the orange line, that again potentially signals that a reversal may be coming, and that in that situation, you'd be more bearish. But here's the best way you want to use this, because again, you just don't want to use that alone. Here's what you really want to do here. Now, keep in mind that what I'm going to show you here won't always work. There's still other things that you'd want to look at. For example, candlestick patterns, a lot of other things. But again, what I'm going to show you here would give you a way better probability of success with your trade rather than just using the indicator here by itself. So the first thing you want to do here, if you want to use this indicator in a lot better way, is you want to start by first identifying the trend of the market. And again, the way we can do this is by adding an EMA, right? So the exponential moving average. And I'm going to use the 50 EMA line here. So again, we go back to our indicator, we search up EMA here, and under technicals, we see moving average exponential. So you would go ahead and click on this. This will add it to our chart. And then we can go ahead and change the settings here and change the length to 50, okay? So I like to use 50 for this one. You might want to modify that, test different things out. But as you can see now that we've added the 50 EMA, this allows us to identify the trend of the market. Now, the reason we want to identify the trend of the market is because it's very important that you don't trade against the trend. Something you hear a lot, right, is the trend is your friend. You don't want to trade against the trend. A lot of the times when you do that, you will lose money. And so the way you identify the trend here is you take a look at where the price is compared to the 50 EMA and also which way the 50 EMA is sloping. So if the price is below the 50 EMA and the 50 EMA is pointing down, that tells us that we are in a downtrend. And so in a downtrend, you want to look for shorting opportunities. You don't probably want to go long. You don't want to go against the trend. Similarly, right, if the price is above the 50 EMA, like we see over here, right, if it's above this 50 EMA and the 50 EMA is pointing upwards, this lets us know that we're in an uptrend. So in an uptrend, you're looking to go long. You probably don't want to short. You might end up losing a lot of money that way. So the first thing you want to do here is identify the trend. Also remember, a lot of the time, these moving averages, for example, you can see here, right, they serve as areas of support and resistance. And that's very important here. As you can see here, it served as support. Here, it served as support as well. So let's go ahead and let's first show you guys an example of a bullish situation here, okay? So let me go over to this chart right here. So this chart is using ticker symbol CAR here. And again, this is going to be a bullish example. So again, same thing that I showed you over there, right? We have our stochastic indicator and we have our 50 EMA line here. So the first thing we want to do here is identify the trend. What I'm going to do is I'm going to go back to April here. So during April, what was the trend here? So again, the way we do that is we look at the 50 EMA. We see that the 50 EMA was pointing upwards. We see that the price was above the 50 EMA. So we know here that this was in an uptrend during this period of time. So again, since we were in an uptrend here, we were looking to go long. And what that means is that for the stochastic indicator, we were looking for oversold conditions. However, here's what's very important. We want to wait for the stochastic line, which is the blue line, to go above the orange line, like I mentioned before, right? This is potentially a signal that a reversal may be coming. Furthermore, we also see, right, the price here is getting close to our 50 EMA line. Remember, I mentioned earlier, the 50 EMA line, a lot of these EMA lines serve as areas of support and resistance. So we have our price coming towards this line. We potentially believe this is going to be an area of support. Furthermore, we know that we're in an uptrend here, so we probably only want to go long here. Furthermore, we look at our stochastic indicator when we see that it is telling us that it's oversold. And finally, right, we also see here, right at this point, that the blue line, the stochastic indicator, goes above the orange line, potentially signaling to us that a reversal may be coming. So at this point, you could have potentially gone long. And what happens to the price? Let's go ahead and actually just plot a line here. Right, what happens to the price at this point when the stochastic line crosses the orange line here? The stock does indeed make a pretty big rally after that. Right, so we have a couple of different things we see here. Again, we know we're in an uptrend, so we only want to go long. Now, since we're in an uptrend, we want to look for oversold conditions. We see the stochastic right here became oversold. We wait for that to go above the orange line, signaling that reversal change. And at that point, we could have potentially entered. And as you can see here, it would have worked out. Now, let's take a look at a bearish example here. So let me go over here. And this one, we're going to be using General Motors. So GM here. So again, first thing we do, we identify the trend. We have our 50 EMA line. So what trend are we in here? We're in a downtrend. Why? The price is below the 50 EMA line. 50 EMA line is pointing downwards. So we're in a downtrend. We only want to look for short positions here. That means that for the stochastic indicator, we want to look for overbought conditions so that we can go short. So let's take a look at where we see this. So notice here, if we go back to this area around March, April, again, what do we see? We see the price heading back up towards the 50 EMA line, which, like I mentioned before, a lot of the times serves as resistance and support. So here, right, we're thinking, hey, this might act as resistance. Furthermore, we know that the stochastic indicator is telling us that it's overbought. And then finally, again, the blue line, the stochastic indicator, crosses below the orange line, signaling a potential reversal. And what happens to the price of the stock after this? Let's take a look, right? So right here, when it crosses the orange line, goes down quite a bit, right? And so that's how you would basically use the stochastic indicator. Again, this isn't always going to work. You probably want to use a couple of other things, but that's basically the concept here with this indicator. So anyways, if you have any questions about anything I just talked about, feel free to leave them in the comment section below. Check out the Discord, a link to it in the description below. Hope you enjoyed the video. Let me know what you guys think, and I will see you guys next time.